Hello and welcome to the next in our series of videos looking at later life divorces. Today we are joined by financial planner Jeremy Rowe from, he is from two places really. He's a financial planner with Abacus, but also an expert witness with Paladin expert witnesses. And in that role, I believe you provide pension reports to help resolve how to deal with pensions on divorce.
Absolutely.
And as always, we're joined by Jackie.
Good morning.
Yeah. So I think we've obviously had some discussions before, and I think it's incredibly worrying, the lack of pension provision on divorce, the number of people who conclude their divorce settlements without thinking that they should have any kind of pension sharing order in place. We're seeing that 42% of household wealth is made up of pensions, and yet only 15% of divorcing couples include pensions in their settlements. I think, and you probably see this as well, Jeremy, that people become particularly possessive over pensions, but equally the person who doesn't have the pension can often see that it isn't their asset, and they don't fully appreciate that it's accrued during the marriage. It is a matrimonial asset that needs to be divided.
Yeah, absolutely. It is a very difficult one, and it tends to be something that is, for whatever reason, significantly more emotive than your home or anything else. It becomes an asset that people can become very, very possessive over.
Yes, yeah. And I think particularly with older couples, we see typically the woman has a much less pension pot, a much smaller pension pot than her husband. And if we do take that out of the equation, then it leaves a massive discrepancy between the income that those two people will receive in their retirement.
Yeah, absolutely. And one of the biggest problems that we've actually got is if you look at the demographics of divorce at the moment, divorce rates are actually pretty much falling across the UK. But for older people over 65, the divorce rates went up by 23% for men and 38% for women. So it's a really big issue that people need to get somebody involved as early as possible, so that they can establish whether or not it's something that they do need advice on or don't need advice on. Because taking the view that it's something that might generate a bit more friction is the wrong approach, because the whole purpose of having a pension and divorce expert involved is to try and establish what is a fair split of the assets. And if that fair split should result in equality of income at a given point in time, taking into account only the matrimonial assets. Again, sometimes you get people concerned that if their pensions are involved, that they will be paying for their divorce for the next 15 years of their work, and that's simply not the case.
Those are incredible statistics, Jeremy, and I think you hit on something really prevalent, in terms of our clients when we're looking after them. The first thing being the emotive side, the fact that pensions are so sensitive, not just in terms of the whole possession theory behind it, but also the history, the narrative, how it's been accrued, etc., all the hard work that's gone into it, and all of those expectations. And I think sort of they go hand in hand really in terms of sensitivity, pensions and inheritance. And of course, when we're dealing with older life couples who are separating, those two, are up there in terms of their paramount concerns. The other thing I think also, Sarah, which we find, which is still quite a common notion that we're dealing with, is that quite often one particular party will be very much fixated or concentrating on the capital in the home, so the former family home, as opposed to the value of a pension. It's still quite alarming to find that a lot of people are not au fait with the fact that there is value in a pension, and that it is part of that wider pot, in terms of the matrimonial pot, so to speak, that's on the table at the start, to at least be looked at and examined fully in terms of disclosure, and that we can't, as lawyers, give that advice unless we have the proper full information.
Absolutely.
Possible.
Yeah. And I think people, like you say, are so set on sometimes staying in the matrimonial home that they consider they can offset without any kind of advice from any kind of pension expert, which is really, I'm sure Jeremy can add more to this, but it's really dangerous because you can't offset a pension against a capital asset on a pound for pound basis.
No, absolutely. And that's one of the big problems I often say to clients. The difficulty with that is you can't spend a brick and you can't live in a pension. So if you separate the assets the way that sometimes people look at doing it, you end up creating two significant problems. The other side of things is if you consider the amounts that people will often save after your home, the pension is very often the second largest asset that people will ever accrue. And it seems very odd that there's this mystery around it that discourages people from considering pensions if divorce is on the cards.
Yes, yeah. So in terms of pension reports, obviously you've said it's really important to get people like you and us involved early, and I think that's what we've tried to get through in each of our videos, is that getting advice and knowing your rights is key. You can do what you want with it after that. But do you find pension reports are needed in every case? Are there cases you can go, right, I know what this is, we don't need a full-on report?
Absolutely. There are cases which are reasonably straightforward, and they are increasing in regularity, but certainly more so for the younger generation. One of the problems with later life divorces is that they very often involve people who have final salary schemes, or what are known as defined benefit schemes. So whether that's civil service or NHS or not just the government pension scheme, but also lots of banks have offered those sorts of things in the past. If you've got those kind of assets, you definitely need to get a pension specialist involved. Yeah. If you've got what's called a defined contribution or money purchase arrangement, typically personal pensions or group personal pensions, it's much less of an issue because they're not coming with any guarantees. What they are is if you've got £100,000 in your pension, you will get whatever benefit. So you can quite happily look at that as a capital sum and separate it on that basis. But one of the third string to all of this, which again is where I think pensions and divorce specialists help, is that very often the state pension will be ignored. Again, it's a very dangerous thing to do. Where we are now, following the introduction of the new state pension, everybody has their own full state pension entitlement if they built it up over 35 years. But if you've got somebody who's 65 or 70, it's possible that usually the woman, will have a lower national insurance contribution. And those lower national insurance contributions can result in a lower state pension. And that can be a real problem. And again, with the change to the basic state pension, which came in under the new basic state pension, with the move up to 35 years required of employment, it's really important to make sure that you get two forms completed, one of which is called a BR19 state pension forecast. That'll give you an idea of what your state pension entitlement is likely to be when you reach state pension age. And the other one is a BR20. And the BR20 is specifically for state pensions on divorce. And the number of instructions that I get where these are missed is off the chart. And it's 99 times out of 100, there's nothing to report there. But in some instances, it can be tens of thousands of pounds. And all it takes is one form completed in 15 minutes, sent off, and then wait for the Department of Work and Pensions. Now, the DWP isn't brilliant, but they usually come back to you in 5 or 6 weeks, which is often, if you're looking at final salary schemes, a lot faster than the trustees will come back.
Yes. So you touched on sort of civil service and armed forces pension, and we know that, well, Jackie and I know that the cash equivalent value given to us by the trustees will be significantly lower than that which is used for pension reports. And those are the kind of situations when we definitely need a pension report. But why is there that discrepancy?
It's a very complicated area, but in short, defined benefit schemes or final salary schemes give you a guarantee. That guarantee means that all of the risk associated with providing you with a fixed level of pension is carried by your employer. So, for instance, the civil service if you're in a civil service and the civil service promises to pay you £10,000 a year, if markets go up or down, that's not your problem. That's your employer's problem. Very often with, not with the government schemes, but with other pension schemes, you will find that they will not allow a divorced spouse to join the pension scheme. So it becomes a money purchase arrangement when it becomes separated out. The risk with that all sits with that individual who has that pension arrangement, and the amount of income that they will receive is then dictated by the prevailing annuity rates. Now, annuity rates are linked to the Bank of England base rate, and the Bank of England base rate, as we've seen recently, has resulted in has gone up significantly, which has resulted in a fall in cash equivalent values, but correspondingly an increase in annuity rates. So what you sometimes have is people looking at these things and saying, well, my cash equivalent value is falling, and that's a real concern, but they then don't consider the other half of the equation, that yes, you will get less of a pot, but you will actually get more of an income per pound of that pot because of the increase in annuity rates. And really, from my point of view, it's very much about telling people what you've got, how the assets should be split, and then that enables people to kind of plan for the future. And particularly for people later in life, that can be very, very difficult, where you've been planning for possibly 15, 20 years, you're heading towards retirement, and it's really important to know not only what income you might get, but what income you might need. And you're starting quite often at that point with a blank slate, and having an expert say to you, you need to do is estimate your bills, what your costs are going to be, and you can then work out from that point whether or not you're going to need to make lifestyle changes or not.
Yes, yeah, and you've touched on needs there, and on divorce, needs is one of the factors the court will take into account. But in second marriages, often people feel even more possessive if part of their pension has accrued before they've met their spouse who they're now divorcing. When you're preparing your reports, can you exclude those marital or post-marital contributions, even if, I mean, the court will then make a decision as to whether that's appropriate, but is that something that can be addressed? Because I know it's something that massively concerns clients.
The simple answer to that is yes. Pre-matrimonial assets, I'm very happy to exclude. I have had instances in the past where people have asked for 4 days of pre-matrimonial accrual to be excluded. And the answer in those circumstances, 4 days out of 22 years, I'm not excluding. It's not worth it. But very often we will exclude pre-matrimonial assets, and post-matrimonial assets would be excluded anyway, because we're actually only looking at the accrual to the point where the calculation is done.
Okay.
Yes.
And Jeremy, I'm guessing, well, I know, but obviously your expertise is only as good as the information that we / our clients give you, of course. And you need all of those pieces of the jigsaw before you can then come back and say this is the full picture. And also in terms of being able to compare like with like.
Yeah, absolutely. So I very often get information which will just be the cash equivalent value, that a client will have gone away and got a cash equivalent value from their pension provider, and it then may take several months to actually come through to me, by which point it's out of date. But one of the difficulties is that trustees are obligated to provide a cash equivalent value once every 12 months free of charge. And if you don't get all of the information first time round, what you can do is then end up with a 3-month delay, because trustees are allowed 3 months under the legal guidance to provide it. But you may also land yourself with a £1,500 bill for a second cash equivalent value. So it's, to my mind, it's always worth getting an expert involved very early on. When the expert is involved, they can tell you what you need to do, actually the information that you should be requesting, then it could all come through in one go. And if I have clients who it transpires don't really need a pension and divorce specialist, I'm very happy to go through the information that they've received. If it turns out that their state pensions are fine and they're only in money purchase or defined contribution pension schemes, I'll tell them that at no cost, because you don't need a pension on divorce specialist who's going to charge you for the report, because it's so much simpler. And again, a lot of what I do is with my clients, it's about trying to take the heat out of the interactions between them, because my only job when I am appointed is to act on behalf of both parties to come up with something that is fair. And while a lot of actuaries will produce reports which are superb in terms of the detail, they are very difficult to understand. The reports that I produce will basically say, Mr. Smith is going to get a pension of this, Mrs. Smith is going to get a pension of that. After the assets have been moved over, they should be roughly the same amount. And you can actually see that in the report. And that, to my mind, takes an awful lot of the anxiety out of it. It is seen by clients to be fair and reasonable, and a reasonable way of approaching things. And that can, as I say, take an awful lot of heat out of the conversation.
That sounds great. And I know also, obviously, there's been a big movement with the courts and the judges in particular, as to making things more user-friendly and using, common language that everybody will understand, layperson's language. And of course, there's been a big rise in this in the last couple of years with the PAG group, which is the pension advisory group, in basically keeping it as wide as possible, getting as many professionals involved as possible, and also listening to the clients, listening to people, and finding out the sort of language that they would use and how they'd understand about pensions. So it sounds like you're doing everything that is required.
No, absolutely. And just a note on the Pensions Advisory Group, that the report that they produced in 2017-18, I think it was, was absolutely superb. I mean, prior to that, there was very little in the way of guidance on what a pension in divorce report should include, or whether matrimonial assets should be, pre and post matrimonial assets should be included. And it also highlighted some of the difficulties around things like, where you've got two people who are married and there's a significant age difference.
Yeah.
Obviously, that can complicate things. And the Pensions Advisory Group report is absolutely superb. I mean, I wouldn't recommend it as anything other than late night reading. It will send you to sleep.
Yes,
I've read it.
Yeah.
Well, I mean, I found that incredibly helpful. I don't know about you, Jackie, but I think that's been very helpful. And in terms of the take homes, I think it's just that people need to know what they're giving up, don't they? Before they make any decision, they need to know what is fair, what the courts would consider is fair, and actually understand what they might be entitled to if they pursue a pension, rather than saying, no, I'm not going to take it, it's not mine.
Yeah, totally. But then actually, once a pension in divorce have actually gone through, it's very often important to actually take another look at the pensions very quickly, just to make sure that things like death benefit nominations have actually been updated. I've mentioned before to clients that when you get divorced, your will is invalidated, and there's things like that. If there are any trust arrangements in place, making sure that those things are actually tidied up. If you've got any life insurance, make sure that that is right and is actually payable to the right people. So actually getting people involved who are experts and financial planners around a divorce is unbelievably helpful in my experience.
Yes, yeah, I totally agree. Well, thank you very much for your input today. As I say, I found it incredibly helpful, and I hope everyone at home has. Enjoy the rest of your day, and we'll be back with another video soon.
Yes, thank you so much, Jeremy.
Take care.
Bye. Bye.